14 Chinese companies have already received the possibility of buying out shareholders. So this is going to be the biggest number in one single quarter. So what are we looking at, Mr. Xu? What do you think about this possibility?
Well, I think it's mainly going to take place in so-called TMT sector, because that's a sector.
TMT sector, explain to our audience.
Well, technology, media, and internet companies, because previously those companies, they must demonstrate profit making record in order to be listed. So it was very difficult for them to be listed in China. But now the restrictions being removed, China is moving from approval system to registration system. So that's going to be very attractive for those companies. So, yeah.
Is it really a sea change?
Well, that has yet to be seen. I mean, there are a number of these companies who are saying they aren't fairly valued, but you have to wonder with the sort of PE ratios we just heard in that clip preceding our discussion, 168 times PE, that's way out of whack with international norms. So I wonder if that's a sustainable market that they're coming back to or wanting to come back to.
Mr. Wang, what is your feeling about these companies making similar judgments, and at least for now? How is this, if we could remember back, compared to back in the year 2012, when many Chinese companies also had to come back to China, to the Chinese stock market, if they really want to be listed?
Yeah, first of all, we need to see why the Chinese company want to list in the States, because they have a higher valuation and have a higher international brand name, good for publicity as well. But what we've seen now, because the market is so booming for the Asia's market, so a lot of companies has been attracted back to Asia's market. It is different 3 years ago when a lot of Chinese company privatized, but that was for a different reason, a different purpose, because at the time people delist privatized for some sort of corporate governance issues or matters. So this time is really different. People going back to home market.
But then, what would these companies be in the eyes of many investors? Are they still going to be really credible in a way? Because it seems that they are only looking at the biggest benefit, yet some could argue inside the United States, in some of the high-tech stock market, you could still argue you are the quote-unquote the best. At least some see it that way. So Mr. Xu, what do you think might say in a way or reflect about the qualities that some wonder?
I don't think that's a real issue, because I think for some of these companies, to maintain listing in the United States has been very expensive exercise. Number two, I think some of them have become a little bit frustrated because investors don't know them so well. But I really believe the valuation gap is just overwhelmingly significant factor to drive this.
Okay, Mr. Cap, what do you think?
Well, Sital brings out a good point. There is a valuation gap, and it's been debated many ways. I mean, is it that the U.S. foreign investors don't really understand the Chinese companies, or is it the Chinese companies haven't really learned to communicate to global investment community members?
Well, you could always argue both sides.
You could always argue both sides, but then it gets down to fundamental issues of how are these markets structured, and the premise that they will come here and be better valued supposes that the Chinese stock market will remain healthy and viable. It isn't yet really viable in a global context. It's a closed market. There's a lot of issues still with transparency and governance. Now, the U.S. is no, poster boy in this regard either. We've had plenty of stock scandals, but that is a higher level of standard like you were talking about. So these companies coming back, yes, they could perhaps improve on that gap in valuation, but that gap will only remain as long as the stock market continues to do well, and we haven't seen that yet be shown, that this market can continue its bull run. Okay,
but Mr. Wang, is really the quality of the stock market that important for these companies, or for many companies, I would wonder, as long as they could make sure they make a huge benefit out of this, what Sital has already described, the divide and the gap?
I think a lot of companies, when they make the privatization, this this as a goal, as what they're trying to prioritize, because there is some sort of deficiency in the market. So I think that basically they're looking for a valuation, a better, higher valuation in back to the Asia market. Also, because the Asia market now is actually attracting a lot of international attention, even though it is a closed market. It's booming, it's open up. It's basically Chinese policy is reforming to welcome more of them back. So basically, they can get more benefit when they return home. So I think that the trend will basically exist for a long time, in future. Basically, a lot of the high-tech company, a lot of internet company will get benefit, by returning back to their home market.
Are policies like these necessarily going to bring more competition into the Chinese market when it comes to high-tech companies, and therefore better qualities out of them? Or this is only for those companies who make big bucks, Mr. Cap, and then come to Mr. Xu?
It certainly could, and I should also state, I hope China's stock markets do improve, and I hope they increase the governance and transparency, and there's further reforms on the government side. It could be great to have viable markets here competing alongside foreign markets, like we see, say, between New York and London.
Well, first of all, we're not talking about all Chinese companies.
No.
We're only talking about Chinese company in the sector of internet technology, media.
That's right.
Right. Secondly, I do believe once Chinese government is speeding up reform, for example, implementing registration system, this window opportunity actually will be closed in the long run. I don't think we're going to see such valuation gap in the long run, but in the short term, it's definitely worthwhile for these companies to exploit that before the system is being fully implemented.
Of course, the Chinese Premier, Mr. Li Keqiang, has been talking about encouraging some of the TMT companies coming back to the Chinese stock market. He's been talking about certain companies with certain equity structures. They are welcome back home. But can they also do both? I mean, they could also do it not only in the Chinese market, but also in the overseas stock markets as well. And therefore, they could win in both ways. So why are we seeing them only looking at one option while giving up the other option, even though that option have already been made a lot of efforts, Mr. Xu?
I think what Premier Li has alluded basically means the following. First of all, the equity structure which you have described going forward is not going to be there. Secondly, it's going to be much easier for foreign investors to invest in companies such like Tencent, this Chinese technology company. Thirdly, there will be much higher supply of Chinese companies to be listed in the domestic market. So in a nutshell, in the long run, this market anomaly will disappear.
Okay, is Hong Kong markets already feeling the competition, such a huge competition coming from the mainland, especially for these TMTs? Mr. Wan?
Well, yes, I think so, because the Hong Kong market is facing competitions from the Shanghai market, Shenzhen markets, also the market in New York. Just take Alibaba for example. Basically, go to New York stock markets in Hong Kong. Basically, we only have one player, called Tencent. So I think that when Shanghai market open up more, it will attract more companies going back to Shanghai. Even the company listed in Hong Kong will leave the market and go back to mainland, because we see the higher valuation and also a lot of policies more favorable to them now. So I think the trend will go on for a couple of years, and it will create a marginalization effect on the Hong Kong market.
But are the investors here on the mainland, Mr. Cap, going to be necessarily really interested in these TMT companies? One of the things is that there are increasing number of them, and it's very hard for stockholders, particularly individuals, to identify and tell one from the other. So are they really going to be the darlings of the stock market, even on the mainland?
I think that looks set to continue. I mean, Chinese are big lovers of social media, internet technology. Actually, China has leapfrogged ahead of the US in terms of adopting new technologies along the lines of the internet and mobile commerce and so forth. So yeah, I don't think that's as much the issue as, can these investors put their money in these stocks and trust where they're putting their money in terms of, again, are they getting the transparency? Is there the accountability that you would expect from this kind of investment?
We not only see encouraging policies coming from the Chinese government when it comes to stock market, but also see a general, as some describe as a gold rush among the Chinese public going to the stock market. But many wonder how sustainable this could be on the one hand, and on the other hand, how to, in a way, distinguish the good ones from the worst ones. So that is, I think, an ultimate question facing the Chinese stock market, not only just for companies coming back, but also for companies as a whole. So, Mr. Xu, without really looking at the culture and the quality of the Chinese stock market in the long term, none of these companies could really be guaranteed with a bright future. So how are we looking at that at this moment from your perspective?
I think in the short term, even medium term run, Chinese stock market is still going to be dominated by individual investors. This is just pure math. I mean, they account for 80% of transactions, but in the long run, that's going to be changed with the initiatives such like Shanghai Hong Kong Stock Connect, Shenzhen Hong Kong Stock Connect, and we are going to see greater representation of institutional investors, pension fund, so on and so forth. But in the short term, I do believe this market will remain relatively speculative.